Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Guolian Minsheng Securities Co. Limited Annual Report. Guolian Minsheng Securities Co. Limited offers a wide range of financial products and services to its clients. At the core of its operations are brokerage and wealth management services, which include securities and futures trading, investment consulting, and asset allocation. The company also provides corporate finance and advisory services, offering financial leverage for brokerage clients and portfolio management and maintenance. Additionally, it offers investment advisory and transaction execution services, as well as wealth management products. In terms of proprietary trading, the company engages in direct investments and funds-related business, including trading in financial products and securities-backed lending and repurchase businesses. Its asset management and investment arm provides a range of services, from portfolio management to investment banking operations. Overall, Guolian Minsheng Securities Co. Ltd.'s diverse range of services makes it a comprehensive financial solutions provider for its clients. Guolian Minsheng Securities Co. Ltd. Market capitalization of 45 billion is significantly larger than the average industry peer of roughly 0 billion. This shows that Guolian Minsheng Securities Co. Ltd. holds a significant advantage in their industry. Guolian Minsheng Securities Co. Ltd. trades at a lower price-to-earnings ratio of 11 times and a lower price-to-book ratio of 0.42 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The company exhibits a very high leverage profile, with liabilities accounting for 81% of total assets. This elevated debt level warrants heightened caution, as it may limit the company financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, the key contributors include revenue from net investment gains and other income, which saw a staggering 144.98% increase from 2024 to 2025. The brokerage and wealth management business also experienced significant growth, with a 206.03% increase in revenue. Proprietary trading business was another area of notable growth, with a 233.47% increase in revenue. Credit transaction business also saw a substantial increase of 75.01%. Commission and fee income from securities and futures brokerage services, as well as underwriting revenue, sponsorship, financial advisory, and investment consultancy revenue, all contributed to the overall revenue growth. On the decline side, the primary drivers include a decrease in revenue received by the group from securities and financial products services, which dropped to RMB 16 million from RMB 77.3 million. The property leasing business also saw a significant decline of 100%, with expenses incurred for related services increasing by 31.4%. Investment banking segment and proprietary trading and investment business segment also experienced declines in net investment gains and other income. Overall, the growth drivers are largely concentrated in the brokerage and wealth management business, proprietary trading business, and commission and fee income from securities and futures brokerage services. In contrast, the decline drivers are primarily related to a decrease in revenue from securities and financial product services, property leasing, and expenses incurred for related services. The net income of the company experienced a significant growth from RMB 397,419 in 2024 to RMB 2,008,000 916 in 2025, marking an impressive increase of 405.49%. This substantial rise can be attributed to various factors, including improved compliance management and risk management systems. Profit margins also underwent notable changes during this period. The profit before income tax saw a remarkable growth from RMB 372,805 in 2024 to RMB 2,470,070 in 2025, representing an increase of 566.29%. Conversely, the weighted average return on net assets experienced a slight decrease from 3.89% in 2023 to 2.19% in 2024, before rebounding to 4.16% in 2025. The reasons behind these changes are multifaceted. The company's enhanced internal credit evaluation systems and risk management systems played a crucial role in improving its financial performance. Additionally, the strengthened performance guarantee of compliance risk control personnel contributed significantly to the company's success. These strategic initiatives have undoubtedly had a positive impact on the company's net income and profit margins. The company's financial performance indicates a concerning trend. According to the provided data, the company is experiencing negative operating cash flow in 2025. This is evident from the net cash used in operating activities, which amounts to -10,175,961 RMB 0. Furthermore, the operating cash flow for 2025 is also reported as a negative value of -10,175,961 RMB 0. These figures collectively suggest that the company is struggling to generate sufficient cash from its operations, resulting in a net outflow of funds. This negative operating cash flow can have significant implications for the company's financial stability and future growth prospects. It may indicate underlying issues with the company's business model, operational efficiency, or management decisions. To address this challenge, the company will need to implement corrective measures to improve its operating performance and generate positive cash flows from its operations. The company's debt level has undergone significant changes over the past year. According to the extracted summaries, the total debt level increased by a substantial RMB 15,790,823 from RMB 25,821,411 in 2024 to RMB 41,612,234 in 2025. This represents a staggering 61% increase in just 1 year. Furthermore, the company's total liabilities also saw a notable rise of 72.7% year-on-year. In terms of interest expenses, there is a mixed picture. On one hand, interest expenses increased by RMB 419.57 million, 31.75%, from 2024 to 2025, and also rose by 32.3% over the same period. However, it's worth noting that interest paid for bonds in issue decreased by RMB 29,105, indicating a slight decrease in certain areas of interest expenses. Overall, while there are some inconsistencies in the data, it is clear that the company's debt level has increased significantly, and interest expenses have also risen, albeit with some minor exceptions. The performance of various segments within the company has been analyzed, revealing both strong and weak areas. On the positive side, the brokerage and wealth management segment has shown impressive results, as mentioned on page 54. Similarly, proprietary trading has also performed well in this period. On the other hand, investment banking and credit transaction have struggled to keep pace with expectations. These segments have been identified as poorly performing, according to the data presented on page 54. This disparity highlights areas where the company needs to focus its efforts to improve overall performance. Management is expressing a positive outlook for the company, driven by a recovery trend in the market environment. They are optimistic about the future due to significant year-on-year increases in new fund establishment and capital raising. The company's strategy involves focusing on industrial and institutional clients, investing in internet support, promoting the transformation of its traditional brokerage business, and adhering to compliance boundaries. To achieve absolute returns, management is positioning the company strategically through portfolio management. This approach aims to steadily expand the business while maintaining a focus on integrated development of cultural initiatives. The company prioritizes refinement of shared values and promotes integration of advantageous cultural elements. However, there are also concerns about potential impairments to goodwill due to changes in key assumptions, which could impact the financial condition and results of operations. Management's overall strategy is centered around adapting to changing market conditions while maintaining a strong focus on compliance and cultural development. By investing in internet support and promoting transformation of its traditional business model, the company aims to expand its reach and achieve steady growth. The company has made several significant acquisitions and divestitures over the years. In terms of acquisitions, the company acquired Guolian Fund in 2023, Minsheng Securities Co., Limited. In 2025, and also acquired financial assets held under resale agreements, cash held for brokerage clients, and bonds in issue. These acquisitions suggest that the company is expanding its portfolio and increasing its financial capabilities. On the other hand, the divestitures indicate a strategic decision to reduce ownership or exit certain investments. The company transferred 33.409% equity interest in Shanghai Fund Management Co., Limited, and jointly transferred a total of 58.409% equity interest in Shanghai Fund with La Compagnie Financière Edmond de Rothschild Bank. The financial assets sold under repurchase agreements also indicate a significant divestiture, totaling RMB 221,783. These transactions suggest that the company is actively managing its portfolio and making strategic decisions to optimize its investments. The company has a history of paying dividends to its shareholders. This is evident from the financial statements and summaries provided on various pages of the report. On page 45, it is explicitly stated that the company paid dividends in the amount of RMB 127.35 million. Furthermore, the dividend/buyback summary sections on pages 217 and 257 also confirm that the company has indeed paid dividends. This suggests a consistent practice of distributing profits to shareholders through dividend payments. That concludes the financial summary for Guolian Minsheng Securities Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.